Good morning, it's Jonathan Barrett with the Week Ahead report. That's the War report. That's the report where we talk about a little bit of a recap over the weekend, or the holiday in this case, and we also talk about up-and-coming events and certainly some of the market's themes and trends that we think will evolve throughout the week. First of all, let's have a little bit of a recap. Obviously, we've all had a couple of days off. We've had holidays, Easter holidays, and we're back at work now. I think it's good to recap where the markets have been and pretty much what they have been doing since we've been away on holidays. Okay, let's have a quick look there. The Dow, as you know, they didn't have Easter Monday like us. So they actually traded, and we'll just get that little bit of an overview there for you right now. Okay, just having a look now, and the Dow was down 26, the S&P was down 2, the Nasdaq was up 5. Also, just a recap on where Europe was since they last traded. Euro was up 14, the FTSE was down 3, CAC was up 17, the DAX last was up 46. The local market down 6 at 4,915. I guess if we take stock of, I guess first of all, what we're starting to see and what happened last night, because that's how obviously we're going to open. And I think the interesting thing is the Dow did come under a little bit of pressure. Also, we saw a little bit of movement in terms of some of the hard commodities. They also came under pressure, copper in particular. Oil was off a little bit. Also, silver took a bit of a dive, and as with copper as well. All indicating, I think, in my mind, that there is this potential for a slowdown. And or should we actually see the prices for some of these commodities at these levels when we know economies around the world are trying to slow down? And I think that's one of the big keys that we're following. And we also have positions like that in the market at the moment. Short copper, short oil. These hard commodities. But some of the other commodities like grains are actually long. So a little bit of a change there, but we feel that that's the right mix at the moment. Okay, so let's just have a quick look at a few things before we go into the numbers out this week. That's just the copper chart, which I think is quite interesting. The weekly copper chart. Ask yourself a question: why should we only be off 5% from a record high when we know the US is working off stimulus packages? We know that China and India are all trying to slow down. So we know that Europe's trying to slow down as well. So you really got to ask yourself, is this correct balance? Anyway, we don't think so, but let's see how it all unfolds. That's copper. But let's move back. Let's look at the dollar index. Dollar index broke to this level here, coming back down to support. We're on support here. Let's see what happens. These are all levels. This is sort of I guess in my mind, still a corrective phase. We have been a little bit slow in trying to get on to the turnaround, but we feel it's pretty soon, so that should eventually occur. So US dollar, still weak, but the chart's a little bit of a low. The Aussie, as you can see, still great guns. Divergence up here. Let's see how that unfolds. Very hard. If you are thinking of going to America for a holiday, probably not a bad idea to book in some US dollars at these levels. Looking at some of the others, dollar yen, as you know, we've been long there for a long time, but we took profits at good levels, and we've come back again. In fact, we took profits up here, which was good. So we're coming back to that area of where we think there's a good chance to start to buy again. Just keep an eye on that. We'll certainly let you know on Twitter what happens in that front. Gold last night had a strong move initially, but came under pressure, and let's see how that unfolds. But there has been that movement to gold on inflationary pressures, and that could unravel itself pretty soon. But at the moment, expectations there should be that interest rates are increasing, so that should sort of try and cool some forms of inflationary pressures that we do have around the world. The biggest mover, I think, was silver last night. Very volatile night, and probably expect that to continue. A lot of profit taking there. The market, I think, is still long, and there's not a lot of liquidity out there. So I'd just be a little bit cautious as to what happens for silver at the moment. Anyway, it'll be a sell-on rally type of deal at the moment, because you can see that that's a huge move. Let's just have a look at that on the hourly. There you go. Failed to breach through that high there, 49. That $50 is probably the record they wanted, and of course that was a signal to take profit. And boy, did it come under pressure. That's a huge swing around last night. Something that obviously we don't get to see too often, but it's certainly a big swinging move for it. That was close to 8% swing, which you don't often get in the silver market. Okay, so that's on Now let's have a look at just the local markets, and let's get the daily. Sorry. I guess with that correction we've seen in gold and silver, probably see some of our miners come under a little bit of pressure. That's where we're trading, nothing too flat, although as you can see there have been divergence there, so would not be surprised to see it come under pressure. Crude, once again, strong move higher, but failed on the top. I'd like to see that come lower. Copper we've mentioned, that we'd like to see that to also head a little bit lower as well. Now the big movers and shakers, I guess, have been in the wheat, corn markets, and there's some very strong moves there on the daily chart. In fact, I don't have to be chart at all. Just have to do that, just move it around a bit. Because we had some very strong moves in corn, wheat and soya. And I actually feel that we mentioned on our Twitter yesterday that we can actually move back into these markets because I think they're having a good move to the top side. This wheat, very strong move. Soybean, you can see, once again, consolidating to a move higher. That's a theme which we've had for some time. Okay, so let's move and concentrate, I guess, more on what numbers are coming out this week. And there is a reasonable raft of data coming out, and I think that's the idea for us is to see how that tells us the story that we're after. And obviously that story is that things are slowing down. And I think that to me is probably what everyone's really looking for, I guess. The fact that, yes, things are starting to slow down in the world, and that data will actually tell us that it is. But anyway, let's keep an eye on it there. All right, just looking at Tuesday night, basically the US Case-Shiller housing price index is due out, and also we've got consumer confidence in the state. Those two there I think are pretty important. Yeah, we've got CBI business optimism in the UK, and I think that's something to just keep a mindful eye on. Remember, the UK is a completely different picture to Germany. Germany continues to be strengthened, and the UK seems to be still in its doldrums. A little bit of data here. CPI in Australia, which will be very important on a Wednesday, and obviously the data from RBA. GDP in the UK very strong, industrial orders in euro, and we've got durable goods and cap goods out of the US. We've also got FOMC rate decision there. Expected really no change there, but we're going to try and look for a bit of a rewording there. And if we get that rewording, then we should see a bit of change perhaps in that dollar as well. But remember that I'm moving out onto Wednesday. A lot of data out of Japan. Keep close to that as to what's happening. Tokyo CPI, IP, and the like. Very important there. Purely because we want to see whether or not they're taking hold, we're getting traction in the growth phase as a result of the earthquake and tsunami. A little bit light to see that at this stage, but it would be encouraging to see a little bit of optimism starting to develop from there. Followed that by Thursday, we've got vehicle production, etc., and construction orders. Now in the States on Thursday, we do got GDP, personal consumption, pending home sales and the like, all quite important there as well. Moving on to Friday, a little bit of data in Australia, Eurozone climate index, consumer confidence, industry and services confidence, all very important there. And in the States, we've got PCI, we've got employment cost index, personal income, Chicago Purchasing Managers, and Bernanke speaks at the Fed Community Affairs Conference, all quite important in terms of the data. But I guess in overall, the overall feeling for the data, and this is what I think the governors want to actually see, things slow down in China, things picking up in Japan, slow down in India, and a slow down in Germany. But at the moment, yeah, they're still trying to slow these things down, slow their economies because of inflationary worries. Let's see how that numbers work and those consumer confidence figures actually work as well. So yeah, quite interesting. Also see what happens with that dollar, because I think that's going to be quite a key. I guess of note on the war report, what are the themes that we're currently looking at? Well, as you can tell, we're sort of looking at a theme that says, let's get off the boil a little bit. You know, we want oil to come under pressure a little bit. We want particularly copper to come under pressure as well. Both got got shorts in both of those. Looking for grains continuing their strong march. You will have noticed that you know, corn, wheat, and soybean all look very, very strong, and I think that's obviously because we're going through that volatile weather situation in the States. In terms of the currencies, little bit mixed there on the dollar. I haven't got anything there, but looking for dollar yen if anything happens on that front. And I guess that's pretty much on equity markets, a little bit more sideways. Let's see what the earnings report actually occur in the States. We might get a little bit of lift out of that. But at the moment, I feel that we're looking for a little bit more of a correction across the boards. So let's see how that travels. Anyway, that's about it for me. Hope everyone has a great week, and we'll certainly talk to you next week. Bye for now.